Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock. With news, the war in Ukraine is adding to the global supply chain stress, and there's been a major bond rally as risk-off sentiment spreads. And further, there are signs of a collateral squeeze in some financial markets. But first, there's been a notable dairy auction this morning. Overall, record prices were reached after the fourth consecutive solid rise. This won 5.1% from the prior event, and the largest of the set. Since the first auction of the year, overall prices are up 19%, but the rising Kiwi dollar has limited today's gains in local currency to just 3.1%. New all-time record high prices were achieved for butter after another 5.9% rise this time, and cheddar cheese up 10.9% this time. In US dollars, it wasn't a record high for either skim milk powder or whole milk powder, but in New Zealand dollars, whole milk powder did touch a new record high. Analysts were expecting higher prices along these lines. It'll be interesting to hear what their new Farmgate forecasts are when they are out. They're sure to rise. They've all been holding back to see this result after Fonterra raised its estimate for the season to above each of their prior calculations. In Eastern Europe, Ukraine holds just, but faces a new, more brutal version of the invasion as Russian anger grows that it wasn't welcomed by an easy victory. Despite the grim European situation, however, the February factory PMIs in the US were all very positive. The widely watched ISM one rose marginally and holding its very healthy level. The internationally benchmarked market one also rose. New orders were up and were up strongly with the pace of cost increases stabilising. In Canada, they released their fourth quarter 2021 economic activity data, and that came out better than expected with a 6.7% rise, up from 5.5% in the third quarter. Both the official and unofficial factory PMIs are up for China late yesterday too, and both recorded minor gains. But they were sufficient to take them from a stall to a marginal expansion. Their services PMI is little change too, and still in a tepid expansion. However, yesterday a senior Chinese official warned that they are facing big challenges stabilising consumption this year, amid huge pressures on foreign trade. The result is downward pressure across the whole country, their Minister of Commerce said. In Australia, the RBA sat pat with its official cash rate still at 0.1% and gave no signal this was about to change. They say the war in Ukraine is a major source of uncertainty for the global economy. Local wages growth isn't strong and inflation is benign in their view. The US Treasury 10-year yield opens today at 1.71% and down a rather sharp 16 basis points from this time yesterday as the international risk-off mood builds on markets. And the price of gold starts today at $1,934 an ounce, and that's up $39 from this time yesterday. And oil prices are sharply higher again today and have pushed well over the $100 a barrel level. In the US, they're now up $10 to just over $104 a barrel, and the international Brent price is just over $106 a barrel. And the price of coal hit a record high yesterday. The Kiwi dollar will open today at 67.6 US cents and a marginal slip. Against the Australian dollar, we're at 93.2 Australian cents and a marginal slip. Against the euro, we're at 60.9 euro cents and a rise of more than half a cent. That means our trade weighted index starts today at just on 72.4 and unchanged from this time yesterday, even if it is still at a 5-week high. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. It was 90 at 9, brought to you by interest.co.nz.